Hello, good morning. Welcome to the stock market weekend review. It is Sunday, April 23rd, 2023. Yes, double 23. Got my coffee ready. Let's jump right into it. Um, since last week, I sound the alarm that it's pretty toppy with the market. The VIX is near it's at the 52-week low last week. And sure enough, it was not a good week in general for a lot of stock. Even so, if you short the SPY, I would say cover some into 20 MA. Can we slice through that? Well, it's all depend on earning, right? At the end of the day, there's a lot of optimism built into this run up for whatever reason that earning is going to be decent. I don't know why people think that way. What has changed in the last 3 months that people think the economy, companies' earning are going to be better? For sure, there are sectors in the economy that should do well because what? Cost cutting, right? You definitely have heard waves of layoff in some sector of the economy since last year. So those companies likely to have upside surprise, while the stubborn few or many that still think that somehow we are going to get a soft landing or no landing, as some of the talking head want to talk about. So for me, be careful. Don't buy into the pump in any stock. Any pump in any stock that you have, that you long, should be an opportunity to either trim, sell, or sell cover calls. Okay, you got to do one of the three, if not two of the three. That's what I'm doing. Doing nothing is usually the mistake. Same thing with the QQQ, right? I talk about it being toppy way back in early April, and it has struggled, right? The only thing that's propping this up is, of course, a lot of the tech company from Google to Meta was doing really well with cost cutting, but even Amazon. Uh, but be careful, okay? If this give, we are flirting with breaking support here. And I think if you short, I wouldn't be worried. I think the path of least resistance is down. So you can see maybe 3% potential down here. I don't see a whole lot of reason why you will see a new breakout of this resistance level for the QQQ. I don't see the reason why. Is any of these companies going to come out with blowout earnings, raise guidance? Sure, they may raise earning because of cost cutting, but they're not raising because advertising is back and business is booming. I don't see it. Let's take a look at TLT. Stabilize, not a surprise, right? If you buy into TLT, if you sold put at 104, I sold put last week. I sold put at 105, 104.5, 104, and I sold even 6 cover calls between last Friday and this Friday in the 108, 107 up range. So either way, I'm going to use options to my advantage with TLT here. To me, it is a no-brainer. If we get a dump on TLT, it's a no-brainer to sell puts using 102.5 because you have this gap fill right here. I think you see a massive flow of money that is sitting and waiting for this gap fill to jump in. Okay, so for sure, I have an order to buy a whole bunch of TLT down here, as well as selling put at this level and below should there be a dump for any reason. Um, since early this year, I have mentioned many times that I don't see TLT going down to this level anymore. Sure, can it go down to 99? Possibly, but we're not seeing this. Okay, we're not seeing this. Right now, we're trading at a tight range between 101 and 108. Anytime it gets to 108 and above, I trim. I sell cover calls. I don't mind getting the share call away and then buy them back 105 and below. It has worked very well over the past 3 months or 4 months. Trade the tight range. Energy, I mentioned last week, the week before, that it's time to go, especially in the 70 and 71 range, right? Not much to say. It's time to go. Now, is it time to buy? Not really. Where would I buy? The gap fill, okay? There's a gap fill here at, well, I'm not going to outright buy USO if it closes the gap at 65.26. To me, that's the time to sell puts below. If it closes the gap, in fact, I will put an alert right here so that I know when it violates the 50 MA and close the gap below. A gap fill puts selling. Okay, so there you go. If we close the gap, I am likely to sell 64, 63, all the way down to 61 as far as naked puts, because I think if we head into even a mild recession, energy will sell off. Every time the fear of recession is real, you see it. And as you can see, look, if the econ data get weaker and the Fed is still not pausing, USO below 65 easily can happen, right? And then sure, selling put at 62 and below all the way down is not a bad idea. In the long run, when the economy bounces back early next year, should we have a recession in the second half of this year, then that's a place to be. Energy, especially it's in the low 60s, high 50s. Yeah, that's a place to back in when I'm scaling out of TLT. Oxy, same thing. When Oxy was 63 and above, I said it's time to go, right? I don't care about the Buffett pump. Every time Warren Buffett come out with news that he bought some because it's 58 and below, guess what? That's the time to sell into the pump. And now we back down to the 60, below 62, gap fill. Okay, if the support fail, and it can easily fail should there is weakness in energy and recession fear creep in, then selling puts at 58 and below, easy decision, right? Even outright buying share. I would outright buy share if I see the gap fill. In fact, I'm going to put in an alert so that I know. Gap fill buy. Okay, there you go. Now I know. Put in the alert. How about other energy play? LNG, I said it's time to go. The risk reward was not all that exciting up here. Now it's down here. It's okay. Here, to me, it's just flatlining, nothing too attractive. I wouldn't touch it. To me, risk reward is pretty much even Steven here. I wouldn't touch it. I wouldn't add to it. I wouldn't hold it, short it, nothing. Coterra, it's time to go, right? It's in that range. Resistance, see, look. The last 3 times it got there, it's time to go, right? So now, to me, the path of least resistance is down. If you want to play Coterra, maybe sell a put at 24 and below, maybe, okay? That would be how I would play it if I want to have exposure in Coterra. But to me right now, I would rather wait until it come down to the below 25 for sure. Okay, there's no reason to buy up here below 25. Yeah, if I see below 24, yeah, I would nibble, buy a few shares, sell some naked put at 22. All right, I would do that. I think it's have decent support down here, but until now, until it break the 50, I'm not gonna touch it. All right, let's move on to other sector. Oh, before I go, last VLO. I had one put assign here. I sold a lot of puts on VLO the past few weeks. And last Friday, I decided to let one of them assign. I was using 123 as my bogey. Of course, that's the 2-day moving average, right? Look, sure, has it violated the 2-day moving average? Yes, for 3 days. And then support, bounce right off that. And then this week, we had a violation of 2 days. Can we see a continuation weakness sideways? Maybe, but I think the risk reward with Valerio is to stay long or buy the dip here. What would I do? Would I sell more put spread below? Depend on what's happened on Monday. I think using 115 and below might be a decent play as far as sell put spread, like 115, 110. I don't know what the premium is, probably not very good, but I let one put assign there. And I feel good that, I think in a few days, if not by the end of this week, I'm likely to be able to exit with profit. Now, if it bounce on Monday, I would have a sell order at 123.89 or 123, between 123.89 and 124. So if there's a bounce, a snapback on Monday, I'm out. Still make money, all right? Because my cost basis on that put that was assigned is 122.5 ish. So I take the small gain and be free up the cash. Okay, easy decision to do there. Now the other area that had some problem, that I had to roll my put spread was, of course, UNH. Never underestimate how the market can be so bearish, right? Luckily, we talk about exit on this pump into resistance, right? And then, of course, I start to play put spread here. When it was below 500 or around 500, I start to sell 495 all the way down to 482. I think the lowest put I had was even 470 spread. So unfortunately, the 495 all the way down to 485 puts, I had to roll them down for credits. So if UNH bounce or finish this Friday above 490, then all the mistake of last week will be corrected this Friday. So as long as it get over 490, then I'd be fine because I roll the 495 all the way down. I roll one rung lower for every option that I had for credit, small credits. But for me, the risk reward now is going long on UNH. Can this thing close the gap down here? Absolutely. Okay, that's why I did not sell any more puts. I roll down the puts I have. I am watching it closely on Monday and Tuesday to see if it's gonna violate the 50 MA and close the gap. If it closes the gap, then it's no brainer to sell 465, 455, or 460, 440 put spread. To me, 460, 440 put spread is definitely worth selling should it violate this and close the gap. Okay, that's my play on UNH. ELV, there was time where UNH was more attractive, but at this point, as of Friday, I felt ELV is more attractive. So I did sell some put spread here with ELV in the 440, 420 area. I did sell a couple put spread down here. Just like UNH, the time to get out of ELV was up here. At the least, use the 2-day moving average or the 100-day as your stop. If you didn't get out on this pump, well, it's here. It's now, right? So now it's the time to buy, not the time to. The time not to buy is up here. The time to trim was into this pump, into earning. Just a quick reminder, any stock that I have, if it pump into earning, I'm trimming. Okay, there is no if, no buts, nothing. Now the other play that I like is Cigna. I bought some Cigna long, sold some put spread, and then profit on this move. I start to nibble back during the week. It's flirting with support here a few times, so I'm watching it. Okay, to me, I'm okay with my one put spread and some small amount of shares. If it keep on going sideways during the week, I'm fine with that. Okay, look, this is what I'm watching. There is this down channel that it is riding. The combination of this down channel and the 20 MA is no doubt resistant. But if it can break over, I think you can see a big run, at least a good run from 250, low 250 to low 270. There is a potential 9% or so run in here. So I like it. Out of ELV, UNH, I think Cigna and ELV right now is a more attractive play over UNH. That's why I would rather add to Cigna and ELV and wait for UNH to show me that it has stopped the decline. It found support. So that's the play on the insurance area. Pharmaceutical, AbbVie still surprised me, right? On this move, I thought for sure that it's gonna flatline, but it bounced. Nothing. I had no position in AbbVie. I was watching it, waiting for it to break the support here, and maybe sell put spread at 155 and below, but it was never. It didn't happen. So I'm out. I don't have anything, and if you're in it, hopefully you raise your stop. If you didn't have a stop and you didn't get blown out on these 2 days right here, then I said raise your stop to the low of day Friday, right? It's too much to give. To me, giving up $2, that's too much, right? You can certainly put a stop here and then put a buy order right below the 20. So if it have a big wick down, then you can get blown out up here and then buy it back $2 lower. $2 is $2. I'm not gonna shy away from grabbing $2. How about Pfizer? The 50, tough resistant. I was looking at this, if it could have break, then yeah, I would love to take profit up there. But now it's back into the add zone. Would I add to Pfizer? Perhaps. I just need to make sure that it found support here. It's in the zone of support, right? So I'm not worried about Pfizer here. I'm wondering if it's worth adding. So that's more of it. JSK. I'm glad I took some profit on this move. Stay disciplined. And now I'm looking to buy back. Yeah, I bought back a little bit. I bought back maybe 1/5 of what I trimmed up here. And if it show me that it can, find support here, that I would mind buying back more. But to me, I have enough exposure in JSK. I do have a decent amount of profit. So I have a stop on portion of my position. I was watching it the last 2 days about whether I should move my stop to here. But if there is a strong move on a stock this week, then I definitely will put a stop on low of day Monday or use a 20 MA and then be happy that I locked in the profit. I did not have any stop right now because it was flirting with the 20 MA, and when it sit on this thing, there's no point on using the 20 MA as a stop because on any given seconds it can wick down and blow down the stop. So I stay out of that. Eli Lilly, I trim. Okay, this was a no-brainer to trim. I believe my top order was 385, 386-ish. I sold some more. I'm down to roughly half, right around, no, a little bit less than half of my original position when I bought on this dip, on this ugly dip here. I have trimmed now more than half of my position. Where this is, it's 52-week high. You have to trim, right? That was a no-brainer to trim. Is where would I completely get out? If it get anywhere, if I sniff anything near 400, I am going to be out, right? But for now, I plan to set a stop using the low of day Friday because it's just too much gain. I would likely set a stop on at least half of my remaining position right using the low of day, and then set a sell order on the remaining half at 399, 400, so that if there's any kind of wick, any pop up, I will be out completely. Very happy with that move. Amgen, if you sell, I think I didn't have a chance to sell put spread, but I was eyeing the 235, 225 put spread. I think there's still enough juice that will make that attractive. That's still a very attractive proposition as far as using 235. You have the 50 MA. The reason why I didn't sell a put spread Friday was this move right here. Sure, on this day, it started to look very attractive on Wednesday. I like it. There was plenty of premium, but then when it violated the 20 so easily and then stay down here, then I said, well, if that's the case, the path of least resistance might be coming down here, right? And if that's the case, then I'd rather be patient, because if it does move down to 30 to the 50 MA area, I'd rather sell puts at 230, 220, buy myself some more safety, right? So yeah, that's the reason why I didn't. I was watching this since Wednesday to sell a put spread, but given how it behaved fairly poorly, I said, just wait down here. LH is an area of liquidation, right? I won't be holding it. I don't have any exposure in LH right now. To me, it's in the no touch area. To me, the risk reward is pretty much even right here. It's not worth owning or shorting. DGX, pretty much the same. It's time to go, right? To me, it's not worth being in it right now. The time to get into DGX is, of course, down here, right? We waited patiently for it to come all the way down, and that was a time to buy. Now, no reason to be in it. Martin Marietta, I trim. I have some share left, not a lot. And if I see anything near 360, I will be all out. Okay, I don't need to be greedy. I'm very happy buying it 335 and below. I would buy even more, 320, but at this point, no. I would sell the rest. I'm watching it. I'm waiting to see how I can set my stop, because it's no point on using the 100 MA as my stop. Is too far below. It's $4 below. So I'd rather wait to see what it's doing on Monday. Depend. If it's pop anywhere near 360, I'm just gonna just sell everything, because what's the point on being greedy for another dollar? But yeah, that's my play on MLM. Banks. I like banks. I like Bank of America. I have not sell any. I had a sell order up here, but it never got there. So I'm still holding on my share. Would I consider adding more down here at the 20 MA? Maybe. But for now, I'm content with my exposure to Bank of America. I do like Bank of America. KRE, I do have a small position. It's still small, and I would likely add some. The more regional banks come out with earning, and the more the don't have terrible numbers and stabilize, I think the path of least resistance for KRE is higher. You can look at 16 to 18% higher. So I wouldn't mind adding more to this before I add to Bank of America. So I do like KRE here. The risk reward is worth it, but it's a very small position. I have literally 10 times more Bank of America than KRE. And then of course Goldman Sachs. Right now, it's not a thing I would be in. Okay, Goldman Sachs was a buy on this ugly dump here, right? Which I did. I sold put and put spread. But now it's time to go. I have a few shares left, which I was waiting to set a stop. But now that it's up here, I think I will set my stop tight using the 50 MA. I don't mind getting blown out at 338-ish. It's a decent gain. I don't need to give back $10 down here. It's a $10 dump down to the 20 MA, so I don't need to do that. I don't need to stay in there. Starbucks, I think, will have decent earning coming up. But it's definitely in the area that I'm watching closely, right? It's into resistance coming up. So any pop into 110, 111 is a trim, right? I have trim once it crossed 106. I did not add any. Would I add? No. Right now, I'm just gonna let it run, and then if it get anywhere near the 52-week high, I'm trimming, and then keep on trimming, raise my stop. I think Starbucks will have fairly decent earning with China reopen. Okay, speaking of that, let's take a look at the staple, which has been gangbuster. I have zero exposure to staples. I have liquidated Coke, Pepsi, everything. So if you have it, raise your stop. It's time to go, right? If you are greedy, I don't know what to tell you. Okay, all these stocks are super expensive compared to historical valuation, right? Safety, the safety play is still on. I've been talking about this for those that follow me from the old channel, that in tough economic time, it's the easiest place to be because that's where earning is the most stable. Okay, and it has played out true. So if you have it, raise your stop. Pepsi, Coke, you name it. All right, I'm out. I sold Coke 63-ish. I didn't care to stick around for an extra dollar or two, right? But it's in the area that you gotta go. Raise your stop. Be ready for the dump, right? Be ready. It has been here many times in the past year and give back a whole lot. Like, who want this? Who want to see 64 all the way down to 54, right? That's a lot. I don't want to see it. McDonald's, same thing. Insane move. Insane. It's time to go. Okay? Expensive valuation by historical comparison. So raise your stop. If you're in it, congratulations. I just missed out on buying right here because it just didn't go down another few dimes. Another 30 cents I would have been buying, but didn't happen. I just missed it. So it is what it is. Mondelez, which I have not had in a long time. Okay, but look, resistant. This upward trend, yeah, it's very clear. So if you have it, I would say time to go. Okay, it's time to go. No need to stick around. Time to go. All right, let's take a look at FANG before I end this session. Microsoft, I've been saying for 2 weeks, right? It's time to go. The risk reward is not to stick around. Sure, what can propel many of these stocks, even on not so great earning, is what? Expense. If they come out with bad numbers, missed numbers, But if they come out with news that they are going to cut 2% of the workforce, control expense, you're going to see a pop. That's just the way it is. Okay, so yes, it's time to go. But the one catalyst that many of these tech companies has is layoff. Okay, they do have that as far as tailwind. So I wouldn't short it, but I say raise your stop, trim your position. Google, same thing. Okay, it's in the area of resistance. It's not a surprise. Okay, last time it got here, wham, wham. Okay, you're going from 107 down to below 90. That's huge. That's a huge cut, right? And then it's been here twice the last 2 weeks, and now it's at support, right? So same thing with Google. If Google come out with decent earning, not great, doesn't have to be great, but if it come out with decent earning and then more plan to trim workforce, that would be the catalyst to push it higher. So I still have all of my Google share. To me, there's no rush. I did sell some Meta. For those that pay attention to what I said the last 2 months with Meta, I raised my stop. And well, guess what? It happened, right? Now, would I buy back those shares? I'm okay. I don't need to. Would I buy them back down here? I would rather buy them down here, the gap fill, okay? My plan is I'm okay with my remaining share of Meta. I don't need to add more. I don't need to trim, but I would sell put spread down here using the gap fill. If there's a dump after earning, then I think there will be juice down here at the gap fill. Okay, I like it. I like 182.5. Like, selling a put spread like 182.5, 170, 175. I think that's a decent play down here, way below. Okay, Tesla. Boy, was I happy to sell my put spread the last few weeks way down here, because there was just so much premium in puts below 160. I saw 162.5 was the lowest put I have, and that was a little bit scary Thursday and Friday, but I'm glad I did not sell anything. There was time before earning that I had put spread at 172.5, 170, but going into earning last week, I didn't do it. 2 weeks ago, I did, but during the week, last week, I said nope, too close for comfort with earning. Tesla, who knows, okay? And it came down to reference low. That's why I sold my put spread 162.5 all the way down to 155, and they all expire worthless. Yay! I did sell some more put spread for expiration this Friday below at 155 and below, but I would not sell any higher. Even then, I think it's risky. Okay, I think it's super risky because look, there's a gap fill down here at 147. If there is an overall market pullback in the Nasdaq, it can happen. Tesla can come down to 147-ish. So I'm not adding more. I just have a few puts here at 155 and below. Just a few. I had a lot more going into the week of earning, but this week I just have 2, and that's more than I care to have, right? Because this week is going to be a big week for earning. A lot of companies coming out with earnings, so be very mindful, be very careful. It can get ugly real quick, right? So the one catalyst that they all have is, of course, layoff. Apptronik, fantastic run. I trim. Will likely set a stop using low update Thursday, okay? Because that's a lot. 110-ish is a good stop area for me. I'm not giving up all the way down to the gap fill. There is no way. That's $5. That's way too much, okay? Way too much to give up, but it's at an area of resistance, so it's not going to be easy. I'll use Thursday as my, use 110 as my stop, and then if we get anywhere near 115, it's a trim, okay? But I do like Abbott a lot. I do like EW as well. But for me, it is also a trim 88, okay? I mentioned this in the chat group. If I see 88, I'm gonna trim a whole lot, at least 1/3 of my remaining position, at least 1/3. And then if it can get into this channel, who knows? See, look, this channel was there for a while. It got out of the channel. It can get back into the channel. And if it does, then say hello, okay? Right now, it's holding the gap fill, which is a good thing. There's a big gap here that it is absorbing all the share of all the people that was bag holder for the first 6 months of the year, right? Anyone that bought the first 6 months of the year that haven't sold it's a painful ride the last 4 months, especially if they didn't get out on this gap fill back in January, and then they watch it drift down, and then so I wouldn't be surprised if some of those people had been selling this past week. But once those shares are absorbed, and if earning and guidance is good, you can see this thing run. Okay, so I would sell at least 1/3 should we get to 88. But then if we can break into the channel, I think there's a lot of room to run. Okay, I will let the rest run and enjoy the profit. Medtronic is the other play that I have. No doubt, I missed this right here. See, look, there was a crazy. I was watching this. I know 88 range is an area that I should sell, but I did not put an order up there because it was just too far. When Medtronic was trading in the 83, 84 range, I'm just like, I just don't see why it would pop to 88, but it did. Look, late Friday, it did that. So yeah, something happened, some kind of news came out, and boom, it popped from 84 to over 88. Didn't last very long. It lasts from from 3. It start at 315, and then by 340, by 335, it was over. So within 16, 17, 20 minutes, if you didn't watch it closely, you're gonna miss it. And I did. I missed it. Before I go, let's hit some big box retailer. Walmart. Time to go. Very simple. Time to go. Look, last time you got up here, an ugly 3 months ride, right? Back to the 200-day. Yeah, it's time to go. So raise your stop. If you see anything near 154, get out, right? Get out. Move to the sideline, or go to the dark side. Do bear put spread. Do something, and ride the wave down. Target, which I like more. Right now, I have exposure in put spread on Target. I like it. I don't mind buying share if it violate the 200-day, right? If it come down, I would buy share in the 158 all the way down to 156. I like that down here. Come on down. I will buy some. Costco, I have no position. It's time to not be in it for me. I'm content to stay out of Costco. If you're in it, hopefully you use Friday, low of day, as your stop for the rest of the week, because I think the path of least resistance for Costco is down. For sure, don't be holding it within 10 days. Why? What's going to happen within 10 days from now? Numbers for the month of April, right? Costco always come out with comparison number year over year, month over month, the first 2 or 3 days of every month. So the last thing I want to do is tell anyone to hold Costco May 3rd. No. What makes you think the number, the comparison is going to be good? It has been down every single month on a decline the past 6 months or longer, more like the past 8 months. You see all that gain year over year of double digit decline steadily to a point where it's almost 0%, and it's going to go negative sometime before the end of this year. I do not want to be long Costco when that happens, because when that happens, I think you're gonna get a chance to sell puts in the low 450 at the gap fill. That's why I have the alert right here. I will patiently wait for Costco to come down and then sell maybe 445, 430, 440, 420 put spread. Yeah, the growth in Costco is definitely over. And that's it for this week. Be careful out there. It's gonna be